Ladies and gentlemen, welcome to Somewhat Scholarly. My name is Alan Hibbard, and today we are exploring the question, is Bitcoin actually like its white paper? It's a good question, and the reason we're doing this video is because 1 week ago today was Halloween, which of course is Bitcoin white paper today. So I am recording this video 1 week after the 12-year anniversary of Bitcoin's white paper. And a lot of people are saying Bitcoin is nothing like its white paper. We got to fork it, we got to make changes, we need Bitcoin Cash, we need Bitcoin SV, we need all these other things. So let's actually see if Bitcoin is like its white paper and then go from there. All right, so what does it say? Okay, the title, Bitcoin, a peer-to-peer electronic cash system. Okay, fine. First sentence of the abstract, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Okay, so hearing that, you probably think some things. And a lot of people jump to the conclusion that, okay, Bitcoin is supposed to be fast, cheap, decentralized, no centralized exchanges involved, right? And all these other things. It's supposed to be used to buy a cup of coffee and so forth. So anyways, the basic complaints, the basic criticisms kind of fall into 8 categories that I've listed here. Number 1, cash. So like it's supposed to be used on a day-to-day basis, to buy that cup of coffee, so to speak. Speed, it should be fast. Fees, there shouldn't be any, or they should be much lower. Mining pools, they shouldn't exist. Mining break-even point. This is a less common criticism, but I did find it in one article, so I thought I would include it. Basically that miners reach a break-even point at which they will disconnect, and Satoshi didn't anticipate that. So less popular criticism, but we will address it. Privacy. Where is it? Right there, Bitcoin should be private, and it's not. Energy, it shouldn't use so much. Forks, if it did what it's supposed to do, we wouldn't need to fork it. Basically is the argument. We wouldn't see Bcash or BSV. So okay, let's go through these. And I thought, I thought of going through this a lot of different ways. And what I ultimately settled on was seeing the seen and the unseen. Basically, what is in the white paper and what's not in the white paper, and doing that through seeing what words appear and how many times, basically counting the words. So obviously I read the whole white paper through, and I don't know, it's the 3rd, 4th, 5th time I've done that. But then I went back and decided to count the words. Obviously I did it digitally, not by hand. So let's actually see. So addressing the issue of cash. The word cash appears twice. And incidentally, it's in the title, cash system, and in the first sentence of the abstract, cash. Cash, cash. Those are the only 2 instances of the word cash in the entire white paper. Why is that significant? I think it will become more clear as we go through everything else, but what I'll say for now is that Satoshi didn't mean cash in the context of the thing you use to buy a cup of coffee. That's what a lot of people think. I believe, and I think you'll see from this analysis, that he meant it in the spirit of how we use it in a business or accounting sense. Cash is basically the asset that is completely settled, right? There's no wait time, there's no delay, there's no promise. If you look at a balance sheet of a company, top thing will be cash, then cash equivalents, something like money market funds or CDs, like certificate of deposits. You might even see like short-term government securities, short-term corporate bonds. Then you get the longer-term ones of each of those and so forth. Then you get equities, which are less liquid. And further down, you might find real estate and so forth. And basically, you sort things from most liquid to least liquid. And the idea of cash is that you don't need to trade it for something else. It is the ultimate asset, right? And all the other things you would want to trade to get cash. So I think Satoshi meant cash in the vein of the most liquid asset, right? It's not a bond. It's not someone promising you to give Bitcoin later. It is the thing. So anyways, you'll see as we go. Prices. Price or prices does not appear. Good, like goods and services, does not appear. Services only appears once, and it's in a different context. That's why I have the asterisk here. The word appears, but it's in a different context. It's not what you'd expect. I think this was in the in the context of reversible and non-reversible services, something we're going to look at later. Coffee, obviously coffee doesn't appear in the white paper. A little bit, this is me just trolling. But the whole point is, if Satoshi meant for Bitcoin to be cash, and cash means using it day to day, we probably would see these words pop up. You could denominate, the prices of things in Bitcoin. You could, you could price your goods and services in Bitcoin. We just don't see those words. They're just not there. And gold does appear twice. Interesting that, gold is also cash. And historically, it has been that, in a lot of legal documents and so forth. So anyways, I think Bitcoin is more analogous to gold, and that's what Satoshi means by cash. Anyways, moving on, speed. The word speed appears once, but it's in a different context. It's not like, speed is really high or something like that. I believe the speed, I'm trying to think exactly. I think it's in reference to blocks, the speed of block production. Most of these things are the speed of block production, which I'll elaborate on in just a second. Fast, faster, fastest. Interestingly, each of those words appears once for a total of 3 times, but again, it's in a different context. It's not fast transaction speeds, faster, fastest. It's about block production. And specifically, he's using these words to talk about attacking the network. Like if an attacker is producing blocks faster than the honest nodes, blah, 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 like what's going to happen. So he's not talking about fast transactions. Quicker, quickly, a total of twice. And again, in the same vein, right? If an attacker produces blocks more quickly than the honest nodes, blah, 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 blah. So he's not talking about, transaction speed or buying a cup of coffee. He's actually talking about security. Very important to keep in mind. Of course, scalability, scalable, those don't appear at all. Latency does not appear. Instant does not appear. So there's really nothing to suggest speed. Like, it's just not there. Like, all these words that could be there are not there. And then if you look at the white paper for XRP, the XRP ledger, I'm pretty sure latency shows up in the first sentence, right? Just like this first sentence of Bitcoin. I'm pretty sure Ripple has that in there in the first sentence. Anyways, how about like seconds, minutes, and hours? Seconds don't appear. Minutes appears once, hours appears once, but the context here is a little bit different. That's why the asterisk is there. It's about, I think he says, producing one block. Suppose blocks are produced once every 10 minutes, right? He doesn't say, like, suppose we're producing, 100 blocks per minute. No, it's not like fast. He even says, suppose we're producing 1 block per 10 minutes. That's pretty slow, right? Already there is a tacit admission that you're not going to, go into a coffee shop and be like, here's some Bitcoin, let's wait 10 minutes for the first block, right? Satoshi knows it's not about speed. He didn't comment on, trying to make it fast or scalable or any of these other words. And similarly, the instance of hour, he says, the point of the difficulty retargeting is to make sure that a certain number of blocks are produced each hour. And that was the context of the word hour. So not a certain number of blocks per second, or even a certain number of blocks per minute. And then maybe you could make the argument he's trying to make it scalable. It's a certain number of blocks per hour. And again, the only specific he gives was suppose a block is once every 10 minutes. This is not meant to be fast. It's just not. So people who are saying Bitcoin is supposed to be scalable, I don't know where you're getting that from. Like, the words aren't there that would need to be there. Something to think about. Okay, fees. The word fee or fees shows up 3 times, but again, it's not in the context you would think. It's not like he's saying you can do this for no fees or fees will be low. It's not that. He uses fees 3 times. I think they're all in the same paragraph, and I think it's in section 6 on incentives, and he's saying you can incentivize miners if you give them fees. And after all Bitcoins have been created, you can maintain the network by giving out fees. So Satoshi is acknowledging that there will be fees and that more fees will incentivize more miners. So there's no like promise to be able to do this for free. Speaking of free, it only shows up once. And again, it's in a different context. He's not saying you can send free transactions. I think actually free, this was, after a certain number of Bitcoins are created, you can incentivize miners with fees, and the network can operate inflation-free. I believe inflation-free was the use of the word free. So not free transactions. And cheap doesn't appear. So again, I don't know why people are criticizing the existence of fees or the fact that they're high, because Satoshi acknowledges that fees will exist. He makes no promises about low cost or free or cheap. And he's saying that more fees incentivizes the miners to keep to maintain the network, to be on the network, and to keep it more secure. So I don't know why you'd criticize the fees. They're there to incentivize security, which is a primary emphasis of Bitcoin. Okay, moving on. Mining pools. Well, the use of the word pool or pools, it only happens once. And I think this was in the abstract. So basically the first paragraph. And it says, I have it here. Whitepaper. The longest chain not only serves as proof of the sequence of events witnessed, but proof that it came from the largest pool of CPU power. The largest pool of CPU power. So Satoshi didn't use the phrase mining pool, but he said the largest pool of resources. So he's kind of acknowledging that resources will be pooled to create the chain fastest, and then nodes will believe that pool of resources. So this, again, is a really weird criticism. I just don't get that one. Okay, mining break-even point. This one's a little weird. I chose the word leave because I tried a bunch of other words and they just weren't there. But the word leave was there twice, and it was the exact same sentence, or I should say the exact same phrase twice. And the first instance of it also appears in the abstract. I think it's the last sentence. The network, blah, blah, blah. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will. Nodes can leave and rejoin the network at will. So you can leave whenever you want to, come back whenever you want to. That's a feature of a decentralized network. So it's not like there's 5 or 10 nodes that pretty much have to be there operating all the time, or else there's problems, the network collapses or slows down or something. So anyways, Satoshi said nodes can leave and rejoin at will. And he also comments on the incentives to keep them around. So, I mean, claiming that he ignored the fact that some miners would unplug, it again seems weird to me. I mean, he didn't say in an explicit sentence it might not be profitable for some miners, but that wasn't really the point. He just said nodes can leave and rejoin. It doesn't really matter if they're leaving for profitability reasons, or they're just disinterested, or they lost power at their, place, whatever. So anyways, that's a weird one. Privacy. This one's a bit more legitimate. The word private appears 3 times, but it's not in the context you would think. It's actually in the phrase private key. Private key. And what's interesting is the phrase private key doesn't appear in the body of the white paper. It only appears in a diagram 3 times. The same diagram 3 times. Very interesting. The word privacy appears 5 times. Public, 13. 3 of those I think are public key, but the others are more in the spirit of what you'd expect. Announcing transactions publicly, broadcasting everything publicly, maintaining a public ledger. It's all in that spirit. Identity or identities 3 times, like knowing the identity of the recipients of a transaction or the sender. Anonymous shows up 1 time. So there definitely is a spirit of privacy going on. I'll come back to that in a second. Number 7, energy. The word energy doesn't appear. Electricity appears once, and resources appears once. And Satoshi basically says, this is where he makes the analogy to gold, is he says, just like gold miners produce gold, nodes on the network will expend CPU time and electricity to create Bitcoins. That basically is what he's saying in the context of a paragraph or two. So he's acknowledging that energy is required. And of course, he talks about difficulty retargeting as more and more miners are trying to create more Bitcoin. If they do it too quickly, which is where some of these speed words come in, then it gets harder, right? The difficulty level goes up so that, Bitcoins are not created with such speed. My words. But anyways, that's the idea there. Number 8, forks. I mentioned this briefly. Satoshi made it open source. So, I mean, how could you claim that he didn't think people would make changes to the code? Of course, he knows people are going to make changes to the code. He welcomed it. That's what happens when you make something open source and you don't patent it and license it and so forth. So that's a really weird thing. So it seems to me, from reading the white paper and then doing this kind of word analysis, that most of these claims really have no basis. I don't know where they come from. Satoshi didn't promise that it would be used in day-to-day transactions to price goods and services and buy a cup of coffee. He didn't promise it'll be fast. He didn't promise it would have low fees. He didn't say there will be no mining pools. He didn't say these things. He emphasized privacy for sure, and he also emphasized two other very, very, very important things. And as you might guess, it's security and decentralization. So let's actually look at those words. Let's see what's in the white paper, not what's not in the white paper. Okay, so the word decentralized doesn't appear. I'll get that out of the way right away. Centralized also doesn't appear, but central appears twice. So it's in the context of with no central authority, blah, blah, blah. Okay, fine. However, there are other things that really encapsulate the spirit of decentralization, like peer-to-peer shows up 6 times. It's kind of a lot. The phrase without an intermediary, without trust, without something shows up 7 times in that spirit, which is kind of a lot. I mean, compared to these other things that are 1s and 2s and 3s and are used in a different context, we're talking about 6s and 7s already. So, a much stronger emphasis, clearly. Trust or a trusted third party, 13 times. So trust shows up 13 times. The phrase trusted third party shows up 4 times. 4 times. Fraud or defraud, 3 times. Reverse or reversible, 5 times. Attack or attacker, 25 times. 25 times attack or attacker is mentioned. Coin or coins, 18 times. Transaction or transactions, 69 times. Block or blocks, 67. Why do I mention this? First of all, there's a huge emphasis on attackers, right? Keeping the network secure. And as we mentioned, a lot of these other speed words are actually used in the context of if an attacker is producing blocks too quickly, da-da-da-da-da. So not only is attacker used in a security way, but so are the speed words. I mean, this is so important. This is so important to realize. So security is a huge, huge, huge component. Coin or coins mentioned 18 times. This is just sort of interesting, especially taken with transactions and blocks, like 69 times, 67 times. If you just look at how many times that's mentioned, there are so many opportunities to say fast transactions, right? It'd be 69 opportunities to say a fast transaction or some variant of that. There are so many opportunities to insert those speed words, those qualifiers, and they're just not there. They're just not there. So I don't think there are any promises for Bitcoin to be fast or cheap or any of those things. On the contrary, I think that security and decentralization are the biggest things. And as I mentioned, privacy is a huge one. And I guess the last thing I'll say about, what Bitcoin is compared to the white paper is that, you can use Bitcoin in a way that is anonymous or super, super close to anonymous. You just have to be a super technical person and jump through a lot of hoops, basically. And it's not for everybody. And I don't use it that way either, but it can be used that way. So in that sense, Bitcoin is true to its white paper. However, for sake of ease, a lot of people choose to connect to a centralized exchange. And that's their choice. But it's not a part of Bitcoin per se. Certainly not the code and certainly not the white paper. It's just something external, which is totally fine. So anyways, what I would say here is that the white paper contains a set of things that we've explored. And Bitcoin, the way it's used and the way it is today, really contains everything the white paper said, as far as I can tell, plus a little bit extra. And that's up to you if you want that, extra stuff, so to speak. I mean, I guess like, SegWit and so forth, no choice in the matter. But anyways, that in my mind is not a deviation from the white paper. It's just something that changes. So one other thing to keep in mind is if you're thinking about a product or service you want to use, do you say like, oh, that's an interesting product. What did the inventor intend to make originally? Right? And see like, what are the original blueprints? Let me see what the original intent was, and then does it match up? And if so, all right, I'll take the product. Sounds good. And if not, like I couldn't be bothered. No, I mean that's kind of silly. So I think that even if we could find some discrepancies, and I'm not convinced we can, I don't think it would be a big deal. I mean, who cares? It's like Amazon as a company started out as a bookstore. Okay, are you upset that they also sell electronics? I mean, does that somehow bother you? Are you not going to buy Amazon stock because it's different than how it started? Or now it has physical stores, even though when it started out, it was just electronic, just digital over the internet. So are you somehow bothered by that? I mean, it's just so weird. Obviously, things change. Companies, products, services, etc. However, I think Bitcoin is actually remarkably true to its original intention. So anyways, I guess the last thing I'll say about the forks, Bitcoin Cash and BSV, they're claiming Bitcoin needs to be more scalable. I don't know where you get the promise of scalability. And in fact, it's kind of the opposite, where Satoshi even quoted longer times, like a 10-minute block time, and acknowledging the fact that you'd want to wait many blocks before you declare your transaction to be, permanent. Satoshi suggests that it's going to be slow. He doesn't suggest that it's going to be fast. And he also suggests it's going to be expensive. He doesn't suggest it's going to be free. So I think if you actually read what's there and not what you want to see, just like, the actual words and sentences, I think you find that we're looking at something that's supposed to be secure and decentralized, not scalable. So in the bottom of the triangle. And if you don't know what I'm talking about there, you got to go watch my video, What is Decentralization? A lot of people think it's, they confuse centralization and decentralization with concentration and not concentrated. So I'll link to that video in the description. And thank you guys for watching. I'll see you next week.